name's Ryan. This is the Independent Investor Channel, and I reckon that a lot of people who would turn to YouTube or would be in a position to hear this very critical message out probably doesn't go through YouTube searching for financial information, as I feel like a lot of people who have been investing the same way for years are probably committed to a program that they don't really understand why they're committed to that program, all right? However, I do have a pretty important subscriber base, going on about 10,000 subscribers, and it's a pretty astute subscriber base, and I give all the credit to building a subscriber base of my community folks that have actually thought it prudent to come onto YouTube and maybe seek out a daily message on financial peace and get to engage with the creator, someone like myself who has been doing investing for 25 years. I've been investing and self-educating myself up for 15 years. And quite frankly, in this life, it is experience that I value, all right? And this is gonna be a message that I put out there for anybody listening who's got over $500,000 in assets, $500,000 worth of assets. And if you've been sleeping on your program for the last 10, 20, 30 years to build up those assets, you need to pay attention, all right? Because I'm gonna kind of break this down to you, and I'm gonna put a 3-part kind of a warning out there for you guys. If you're sitting on 500,000 up to $1 million, even some folks that I've spoken to up north of $1 million, need you guys to ask yourself a few questions. Who in fact really does have your guys' best interest in mind, all right? If you're approaching retirement, or you're within 10 years of retirement, or maybe, you know, you haven't thought about retirement, but it's right around the corner, man. Maybe you're 15, maybe you're in your mid 40s, 50s, and you've amassed $500,000 or more in assets. Ask yourself, all right? Have you received any correspondence outside of just a warning email from your financial planner saying, hey, we need to sit down and talk about this? You've got $500,000 built up in the firm. We probably need to talk about maybe the potential of making sure that you're okay with where your program was and where it is going, and especially where it is now in relation to where the stock market is now, all right? I am not a proponent of timing the market. Why am I not a proponent of it? Because it's impossible to do, and anybody who tells you otherwise is full of crap. They really are. It's impossible to time the U.S. stock market or any market. We look at trends, we look at historical performance to base our decisions at any given time to give us an idea about what we could have for future returns. But historical premise does not guarantee future returns, and it's amazing to me how many people talk along those lines. What I'm talking about is acknowledging where the stock market is at this current juncture, all right? And it gets me into point number 1 here with regard to, if you're sitting back and you're like, well, yeah, Ryan, I've got $500,000. What, you've perked my curiosity. What do you have to say? Need you to define what your upside potential versus your downside risk is at this particular time, all right? And I'm speaking with a ton of people who are hitting me up and they're saying, Ryan, what do? I can't sleep at night. I went through 2008, 2009. I don't want to go through it again. All right. What if you're approaching retirement and you're, within 10 years of retiring, or you're within a couple years of retiring and you don't want to take your money into a drastic downturn only to have to wait a number of years for you to make that money back, right? Those are all legitimate concerns, all right? So when you're sitting back and you're looking at the stock market right now and you're looking at $500,000 or more in assets and you've still got a mortgage to pay for, you're approaching retirement, and a lot of folks are hitting me up, and when I ask them, how much money do you have in savings? And they come back to me and they say, Ryan, we've got $10,000 in savings. I almost want to fall out of my chair, honestly. I really do. Well, what other assets do you have? Well, we're carrying a $300,000 or a $400,000 note on the house still. We've got car payments and we've got debt, I wouldn't recommend that type of lack of acknowledgement to anybody. And what really surprises me is that the majority of people that I speak to are extremely naive with just thinking that because they initiated a plan some many years ago, and you are to be commended for doing so, all right? We do not invest in the stock market to just put your head in the sand for 30 or 40 years, only to look at it 30 or 40 years down the line and realize, wow, this is great, I've won the lottery. It's not one of those programs that you have the luxury of doing so. And I know there's a lot of wealthy folks out there, and I'm not talking about the folks that participate in hedge funds, all right? That's about as close to stupidity as I can possibly acknowledge. Honestly, I don't even talk about those folks. If you've got multi-millions enough to participate in a hedge fund, go ahead. You just must enjoy giving your money away or have enough money to give away. I'm talking about hard-working folks that have built up, you know, a nice nest egg, and now they're looking at the volatility setting in the stock market. And the rhetorical question that I throw out there for you guys is it time to sit back and define what it is that I want for future growth, okay, as opposed to protecting against the downside risk? And I think if you guys can really sit back and, you know, talk to your spouse, all right? If you represent a couple in this particular conversation, man, sit back and say, man, Ryan brings up a pretty good point. What is it that you expect out of the stock market? Is it worth staying invested, but maybe throttling back a little bit, all right? And putting a little governor on my money a little bit and throttling back a little bit. Do we have to be 100% exposed right now? I think it's absurd if you want to know my opinion. But to each his own, okay? If you're sitting back and saying, you know what? I haven't been able to sleep at night. I've been watching this volatility, man. I am concerned with how much exposure I have to the stock market. I've already adjusted back $20,000-25,000. What is the good of what we're doing now? Are we seeking continued upside potential, or are we taking into consideration, or more importantly, ignoring the potential for downside risk, all right? Now, number 2 here is to define your exposure limits. And it's amazing to me how many people have just put a ball and chain on their ankle and just expected the stock market to be there through thick and thin for them, okay? And I've said this many, many times, all right? Over the course of your life, you want to invest the maximum that you can, all right? To basically put yourself in a position someday to make those decisions to say, are my exposure limits still correct? All right, now if you've built up 20 or 30 years of amassed fortune, you've probably done so via dollar cost averaging or some sort of injections along your life that you just haven't went out and frivolously spent on an Escalade, that you've put that money away and you've done the prudent thing, all right? But what you need to question at this point is, are your exposure limits appropriate for now, okay? So many people have a problem with looking at their exposure limits now, all right? Now, the next thing you want to do is my exposure limits satisfactory now for what I want in the future? All right, that's the key. So many people set up a DCA and they fund the account and they look at it once a year when they go down and they sit down with the financial planner. And I'm not talking about how much money you're losing out the back door with the financial planners, guys. You know, if you've tuned in to any suite of my videos or tuned into any of my catalog, that is something that I am 100% against, all right? I think for individual investors to understand that piece of it, you're going to make out over the long term anyway, all right? But if you're participating in a program where you're involved with a managed situation and you're sitting on some amassed fortune, you need to sit back, acknowledge point 1, acknowledge point 2. Are my exposure limits satisfactory for what I want for my eventual financial security, which could be right around the corner for a lot of you guys? All right. The final thing, you need to sit back and you need to identify what level of commitment you have to the stock market. I see this as an error all the time. You want to know what my commitment is to the stock market? I want to use, abuse, participate in as long as I can, as hard as I can, with as much potential as I can, and then get the hell out. Use and abuse it. All right? You do not need to marry the stock market. You don't, all right? You think that because it's been so good to you and you've went through a few corrections and maybe even a recession or two, that somehow it's going to take that relationship in mind and it's going to treat you fairly to send you off on a magic carpet ride into retirement. The stock market is a brutal war zone, all right? And it will humble you, all right? And the larger your exposure, especially if that exposure is out of whack, all right? If you guys are sitting here and you're sitting back across and you're like, I got $500,000, Ryan, I'm good, but I've got 300 grand in the bank. I own some real estate. I own my cars outright and I own my home. This discussion is not for you. All right. This discussion is for those viewers out there that may be potentially over levered to the stock market and they need to hear it from someone. All right. And I am not looking to be the bearer of bad news. I am looking to exploit what I find all the time as being one of those blind spots in people's program. And I'm sorry if I'm asking scary questions, but indeed, I expect scary answers, and I expect those scary answers for you guys. In summary, if you guys are one of those folks out there with over $500,000 exposed to the stock market right now, I certainly have walked you through a self-assessment exercise. I realize that 99% of the folks do not come to YouTube to seek out sound financial advice. But I tell you what, experience with me goes a long way. All right. And for you guys that are actually hearing this message, man, hopefully you heed it as well. Guys, if it's your first time tuning into the Independent Investor channel, you want to hit the subscribe button, man. You'll be notified of future videos that I put online, man. We're into empowering individual investors to define and specify what it is that they want out of the stock market for future financial security. Guys, we want to leave the comments at the bottom of the video. Share this message with anybody out there that you know maybe has got some worry going on with the volatility, man. Again, I do not advocate for timing the stock market, but it is absolutely fair to sit back on any given day and acknowledge where in fact the stock market is, and go ahead and run yourself through a self-assessment and start asking those scary questions of yourself, man. The time is right now. It is right now, guys. Thank you so much for tuning in, and good luck in your investment future.